Welcome back to Alpha Recap. Markets closed, and we have a full breakdown of what moved stocks today. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. Lots to unpack from a day that looked calm on the surface, but was actually pretty busy underneath.
Totally. Okay, quick headline to get us started. The S&P finished the day up about 0.1%. The Nasdaq 100 finished up roughly 0.2%, and the Russell 2000 jumped about 1.33%. So headline indices were flat, but small caps really outperformed.
Right, and that small cap move was the story. It was a classic rotation day. Money flowed into domestically focused and consumer names, while mega cap tech more or less treaded water.
So, what really stands out here is the contrast between that sleepy headline print and the underlying action, right?
Exactly. On top, indexes barely moved. Underneath, there was a lot of reallocation and some pretty dramatic single stock swings.
Walk me through the main drivers. Why did small caps pop while the big names were flat?
Two big themes. First, there were sector-specific catalysts, most notably policy wins in cannabis, and some stronger sales data that made investors buy into the idea of near-term revenue upside. Second, there was renewed caution around crypto, which pressured tech and fintech names tied to digital assets. So capital rotated towards cyclical and domestic stories and out of crypto-exposed corners. Right. And the other thing is that several tiny names had extreme moves. A couple up big, a string down big, which amplified headline volatility in the small cap space.
Give us a sense of those individual movers. Anything that really surprised you?
Yeah. So one small cap name rallied hard, up just over 16%, which contributed to the IWM strength. And then a number of microcaps plunged, some down 30 to 50%. Those outsized moves made the day feel choppier than the index numbers suggest.
Wait, just to be clear, that 16% rally, that was a single company, right?
Yes, a single small cap popped about 16%. It could have been a deal, earnings surprise, or simply speculative flows. Either way, big enough to move the small cap index a bit.
And on the downside, you mentioned several names down a lot. Give listeners a sense of scale.
A handful of names fell by roughly a third to a half. So think down about 30%, 35%, even 50% in one case. Those moves highlighted the very high dispersion we saw today.
That kind of action makes for a stressful tape, even if the indexes look calm.
It creates a tactical market where stock selection mattered a lot more than broad index exposure.
Let's dig into sectors. Where did the flows go?
Flows clustered in consumer and retail, cannabis, and pockets of materials and mining. Consumer-facing smaller retailers and digital initiatives in retail got attention because investors were pricing in incremental revenue. Cannabis was a clear winner after policy wins. Manufacturers, distributors, and ancillary providers saw buying.
And technology?
Tech overall was mixed. Large cap tech finished roughly flat, which helped the Nasdaq close only a little higher. But cyclically sensitive tech and crypto-linked names lagged because of renewed headline risk in digital assets.
Right, and you mentioned crypto. How big a deal was that on this day?
It was significant for sentiment. Uncertainty about crypto regulation and liquidity put a shading on fintech and some tech names. When crypto headlines ticked negative, anything with exposure to the ecosystem tended to underperform, even if their fundamentals hadn't changed much.
Yeah, that tracks.
And to add to that, a few high-profile voices chimed in. For example, the CEO at Goldman Sachs said the tech sell-off had been too broad, which pushed back against indiscriminate selling in large-cap growth names.
That kind of institutional commentary can matter, right?
Definitely. If enough institutional players echo that view, it can temper selling pressure and lead to some reallocation back into big tech, but only if macro data and Fed guidance cooperate.
Let's pivot to some notable headlines that moved individual stocks, the weird ones and the obvious catalysts.
Sure. Beyond the big small-cap rally and the string of plunges, there were some headline-driven consumer stories. For instance, a major retailer was hit with a lawsuit over rotisserie chicken, and that file worked its way through consumer sentiment today.
Of all things.
I mean, you know, when you step back and look at this, legal and operational issues can roil even the most stable retailers.
And analyst moves? Any big target cuts or upgrades?
Yes, one research shop cut a food delivery company's target by nearly half, which sent the covered name lower and echoed across other subscription and consumer food stocks.
That felt like a reminder that analyst coverage can still swing sentiment in niche corners.
Absolutely. In a market with high dispersion, analyst actions can produce outsized moves in single names.
Okay, quick reactions. Short ones. Did breadth look healthy?
Underneath, yes. Breadth improved because of small cap strength, but it wasn't uniform.
Got it.
If breadth confirmed in the next few sessions, that would be constructive. If not, it could be a short-lived pop.
Let's talk macro and Fed context. Any surprises today on the data front?
No big macro surprises. The Fed narrative stayed central. Investors continued to parse inflation and labor stats. The takeaway was that the market remained data-dependent. If inflation or payrolls surprised to the upside, rate expectations could stay higher for longer and punish growth. If they soften, that helps cyclical and small-cap trades.
So it was more of a watching and waiting day from a policy perspective.
Exactly. The Fed was in the background, and traders were careful about repricing duration-sensitive assets without clearer inflation signals.
Quick technical read. What should traders be watching on the charts?
Technically, the market was consolidating. The S&P basically matched buyers and sellers. Nasdaq tried to stabilize but lacked momentum. The fact that the Russell outperformed is constructive for breadth, but traders should watch advanced declines, new highs versus new lows, and sector participation. If those breadth indicators confirm small cap strength, that could foreshadow a broader rally.
And if breadth rolls over?
Then, flows would likely retrench to well-capitalized leaders, and the market could see renewed volatility. So watch those internals closely.
Let's close with what to watch tomorrow. Give listeners a quick checklist.
1. Earnings and company-specific catalysts. In this market, they will move stocks and sectors. 2. Any follow-through on cannabis policy or sales data. 3. Crypto developments and regulatory headlines. 4. Upcoming inflation and employment prints. And 5. Technical confirmation in breadth measures for the Russell and S&P.
Perfect. Final takeaways, short and sharp.
First, the tape closed with constructive breadth underneath a flat headline day. Second, rotation favored domestic and consumer-oriented pockets, led by cannabis after policy wins. Third, watch crypto risk and single stock dispersion. They can wreck traps for the unwary. And finally, stay tactical. Favor clear catalysts and manageable risk.
Yeah, honestly, I was a bit surprised by how much action lived below the surface. Good reminder to look past index moves.
Yeah, absolutely.
All right, thanks for joining and breaking this down.
Thanks. Great discussion. Talk soon.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai. That's stockalpha.ai. See you next time.